Welcome to the channel. I trust that you're doing well. In this video, I'm going to do a step-by-step beginner tutorial on how to use the crypto.com spot exchange. I'll show you how to transfer your assets from the app into the exchange or from an external wallet address. Then I'll show you the pairings and get you familiar with the user interface, where I'll show you how to buy and sell using limit orders, market orders, and how to set some stop losses. All of that and more with some tips and tricks along the way. If this is your first time signing up on the exchange, I've left a link for you in the description of this video as well as in the pinned comment down below. Feel free to sign up using that link to receive a $25 bonus if you choose to stake some CRO tokens. Getting signed up is a simple process, but you will have to do KYC. This stands for Know Your Customer. This is because Crypto.com is compliant with government regulations. So when you're signing up, you'll have to take a photo or a scan of your identification, such as a driver's license or a passport. I simply used my driver's license when I was signing up. If you're already a Crypto.com app user, you can sign up by continuing as an app user. I've also left some timestamps in the description of this video down below, so feel free to skip ahead to a section that might be most relevant to you. If you appreciate this content, don't forget to leave me a like and hit subscribe. I have plenty more Crypto.com tutorials on my YouTube channel in a playlist for you. If you need to get signed up, now's a good time to pause the video, get signed up, and I'll see you inside the exchange. Once you sign up and sign into Crypto.com, the first thing you'll want to do is set up your two-factor authentication. Not only will this put an extra layer of security on your account, but it also enables other features on Crypto.com, such as withdrawing your coins, setting up sub-accounts, whitelisting addresses, and more. So I'll quickly show you how to set up your two-factor authentication. To add a second layer of security to your Crypto.com account, just come up here to the top right-hand side of the screen and click on your profile icon. From this drop-down menu, click where it says Security. And here's the page where you can set up your two-factor authentication. Simply come over to this button and toggle it on. Then you'll get a little pop-up window where you can set up your two-factor authentication, and you can use Google Authenticator or a similar app such as Authy. I personally just use Google Authenticator. If you haven't already downloaded Google Authenticator, you can get it on the Apple App Store or the Google Play Store. Once you download the app and install it, open it up. And at the bottom right-hand side of the app, you'll see a little plus sign. Tap on that. Then you'll get a couple options to scan a QR code or enter a setup key. Scanning your QR code is the easiest way, so tap where it says Scan QR Code, then hold your phone up to the screen and scan your QR code. And that will add Crypto.com to your Authenticator app. If you can't scan a QR code, tap where it says Enter Setup Key, and then manually type in the key located next to your QR code. Once Crypto.com is added to your Google Authenticator app, you'll have to come down here and type in the 6-digit 2FA code. Once that's done, just simply click where it says Enable 2FA. And you're all done. You've added a second layer of security to your Crypto.com account. If you're already a Crypto.com app user, you can actually transfer your assets from the app into the exchange. So I'll show you how to do that first, and then I'll show you how to deposit assets from another wallet address or from another exchange. To transfer assets from the Crypto.com app, open it up on your phone. Now down at the bottom, tap where it says Accounts. On this page here, tap where it says Crypto Wallet. And then tap on the asset that you wish to transfer from the app into the exchange. So in my case here, I'm going to tap where it says Tether. Then tap where it says Transfer. And down at the bottom here, tap where it says Withdraw. Now tap where it says Crypto.com Exchange. And now we'll put in the amount of the asset that we wish to transfer. So I'm going to tap where it says 100. And you can put in a custom amount. But in my case here, I'm just going to simply tap where it says Max 24 Tether. Then tap where it says Deposit. Then you'll need to confirm your transfer. So if everything checks out here, just simply tap where it says Confirm. And then put in your PIN. And now you've successfully transferred your coins from the app into the exchange. We can now find the Tether in our spot account. To do that, we'll come up here at the top right-hand side of the screen and click on Dashboard. Then we'll come over here on the left-hand side and click on Wallets. Then we'll click on Spot. And as you can see, here's the Tether that we transferred in from the Crypto.com app. If you need to deposit crypto from another exchange or wallet address, you'll be able to find the deposit button over here on the right hand side. And you'll notice that each of these cryptos has its own deposit button as well as withdraw button. Simply click on the deposit button for the crypto that you wish to deposit. I'll demonstrate with Tether. Then you'll get a little pop-up window that will be displaying your deposit address for the coin that you selected. You can copy the address by simply clicking right here, copy address, or you can click here where it says show QR code in the event that you're going to be sending in from a smartphone. The next thing you need to do is make sure that the network matches on both sides of this transaction. You'll notice when I give this a click that there's a few different networks that we can use in order to send Tether. But you don't want to be sending from the ERC20 network into the Solana network, and you wouldn't want to be sending from the Polygon network into the Ethereum network. If the network doesn't match on both sides of this transaction, you're going to lose your coins forever. I'm going to select ERC20 because the wallet that I'll be sending from is on the ERC20 network. And I'll demonstrate by just simply copying the address. Now I'll drag Coinbase into frame like so, and I'll send some Tether from Coinbase into the crypto.com exchange. Now I'm going to paste in the address, and I'll go ahead and just send in 500 for this demonstration. Continue. And send now. And now I'll go ahead and drag Coinbase out of frame like so. Now I'll go ahead and close this out. And I'm going to quickly refresh the page. And as you can see, my Tether has arrived. And it didn't take very long, at least at the time of recording. Now we're ready to trade on crypto.com's advanced user interface. You'll notice over here on the right hand side that each one of the assets has a trade button. If you hover over top of it, a little drop down menu appears showing the available pairings for that particular asset. And you can simply click on the pairing that you wish to trade. And I'll explain pairings a little bit more here shortly. Alternatively, you can access the spot market by simply coming up here to the top left hand side of the screen and clicking where it says spot. And this will bring you over to the user interface where all the trading happens. And right here, you can see that we're viewing BTC versus USDT. If we wish to change the pairing from here, we just simply give that a click, and it expands into a drop-down menu where we can select a different pairing. You can see right here that we're currently set to the USDT pairings, and in a nutshell, what this means is that all these pairings are quoted in Tether. If we sold a coin using these pairings, we'd be receiving Tether for the sale. If we want to buy a coin using these pairings, we need Tether to make the purchase. If we wanted to select a different market type, such as BTC, we just simply give that a click. Now all these pairings are quoted in Bitcoin. So if we sold a coin using these pairings, we'd be receiving Bitcoin for the sale. And if we want to buy a coin using these pairings, we'll need Bitcoin to make the purchase. The most popular pairings at the time of recording is the Tether pairings, so I'll just simply demonstrate with that. To switch the pairing, just simply click on the pairing you wish to trade. So if I click on ETH, now we're viewing ETH versus Tether, but I'll go ahead and just set this back to Bitcoin. Here we have the price action chart, and the price action chart is showing us an asset's performance over a selected time frame. You'll see in my case here that I'm currently set to a daily time frame. That means that each one of these candlesticks represents 1 day of time. If we want to change the time frame, we just simply come up here and click on the time frame that we wish to view. So if we want the 4 hour, we'd give this a click here. Now each one of these candlesticks represents 4 hours of time. The chart on crypto.com is powered by TradingView. This means you're going to have access to some drawing tools as well as some indicators from TradingView. You can find your drawing tools over here on the left-hand side of the chart. And for whatever reason, if yours aren't showing, look for a little blue arrow at the bottom left-hand side of the chart. If I give that arrow a click, you'll see that I can hide the drawing tools. If we click it again, it'll reveal the drawing tools. You'll notice beside each drawing tools icon is a tiny little arrow. If you give that a click, it'll expand into a drop-down menu where you can find even more drawing tools. For convenience, you can even build a list of your favorite drawing tools by simply highlighting the star next to the drawing tool that you wish to add to favorites. So for example, let's go ahead and highlight the star beside trend line. I'll come back in here. We'll do horizontal line. Let's come down a little further here. We'll do a Fibonacci retracement. And we'll come down here and just for fun, we'll put a brush in there and I'll do a rectangle as well. Now you can see I've built a little favorites tab of drawing tools that I can drag anywhere on the chart here. When you would like to add a drawing tool to the chart, just simply click on the drawing tool you wish to add, then come down to the chart and left click. And as you can see, I just quickly added a horizontal down below. If I want to get rid of that line, I'll just right click on it, come down to remove, give that a click, and it's gone. So certainly take some time and get to know the different drawing tools. If you'd like to add an indicator to the chart, you can come up here to this little box that says indicators and give it a click. And here's where you'll find some indicators from TradingView. If there's something specific that you're looking for, such as an RSI, you could just simply type it into search here. Now I'm going to come down and click on Relative Strength Index. And as you can see, I've added the RSI to the bottom of the chart. If I'd like to get rid of it, I just come over here, click this little X, and it's gone. When it comes to technical analysis, I just simply use TradingView, and I'll quickly drag it into frame here. This way, I have access to more historical data, more indicators, and of course, different markets. You've likely noticed that a lot of cryptocurrency exchanges charting systems are literally powered by TradingView. TradingView is free to try, and there's also a free basic version of TradingView that you can use. So I'm going to leave a link for this in the description of the video, as well as in the pinned comment down below. I also have a step-by-step beginner tutorial on how to set up and use TradingView. So I'll leave a link for that video in the description, as well as in the pinned comment for anyone that might find that helpful. Feel free to try TradingView out, and then you can decide if it's a good fit for you. And next to the chart, we have the order book. And the order book is showing us where market participants are interested in buying and selling. These market participants are called market makers, and this is because they're providing liquidity to the order book by using limit orders. When a trader executes a limit order, it becomes visible on the order book for all to see. On the top side of the order book in red, we have the asks, and these are the price points that market makers are willing to sell at least for the time being. Down below in green, we have the bids, and these are the price points that market makers are willing to buy at least for the time being. In the price column of the order book, we can see the price point that those orders are placed at. In the amount column, we can see the amount of those orders quoted in BTC, and that's because we're using the BTC USDT pairing. If we were viewing a different asset, it would be quoted in that asset. And on the right-hand side, we can see the total of those orders quoted in BTC. When a trader comes along and executes a market order, they're matched up with the best available price from the order book, the trade is executed, and then viewable down here in trading history. Here's where we can see trades executed in real time. All the sells will come in red, and all the buys will come in green. In the price column of trading history, you'll see the price point that the successful trade was executed at, and in the amount column, you'll see the size of the trade that went through. On the right-hand side, under time, is where you'll find the time that that successful trade was executed at. When the market gets really volatile, you'll notice that this panel gets quite active. And up here at the top right-hand side is where you'll find your order panel, where you can be a buyer or a seller using limit orders, market orders, and stop loss limits. And I'll demonstrate all of these. First, I'll demonstrate a market order. So we'll toggle the order panel over to market, then simply choose if you're going to be a buyer or a seller of the asset. Market orders are really simple to place, but there are a couple considerations when choosing to use a market order. A market order will execute immediately at the best available price from the order book. This will make you a market taker because you'll be removing liquidity from the order book versus adding to the order book by using a limit order. Because of this, you will pay a higher fee depending on how much you're trading with, and I'll cover more on fees here shortly. Another thing to be aware of is what's known as slippage. We all know crypto can get moving very quickly, whether that's to the upside or to the downside. If crypto begins to dump and waterfall to the downside, it's going to be chewing up all the bids in the order book really fast. If crypto begins to melt to the upside, the inverse is true. It'll be chewing up all the asks from the order book really fast. Remember, a market order will execute at the best available price from the order book. So if the orders are getting eaten up really quickly, this means you may not get the price point that you intended. This could diminish the amount of the asset that you're purchasing if you're on the buy side, and it could diminish the amount of profits you're taking if you're on the sell side. Another way slippage could affect you is if you're doing market orders with large sums of money, especially if it's an altcoin with a really thin order book. If you're doing a market order with a large sum of money, you yourself will be chewing up the orders from the order book. This will change your average entry price if you're on the buy side, or your average exit price if you're on the sell side, making slippage more pronounced. When trading with smaller amounts, usually slippage isn't a major concern unless the market is extremely volatile. but it's always good to be aware of slippage when choosing to use a market order. Aside from that, placing a market order is nice and simple. We'll come back over to the order panel, choose if we're going to be a buyer or a seller. I'll go ahead and demonstrate as a buyer here. Down here, we can use this little slider bar to allocate a percentage of our available funds. So if I slid that to right here, you can see that I have this set to allocate 50% of my available balance into buying this asset. Down here under assets, you'll be able to see your available balance, so you'll know exactly what you're working with. So what you could do is you could come up here to order value and you could type in a custom amount that you wish to spend on the asset. And that's what I'll do for this demonstration. I'll go ahead and purchase 50 Tether worth of Bitcoin. When you have your order set up the way that you want it, just simply click on buy. And as you can see, my order went through immediately at the best available price from the order book. And now we can see Bitcoin down here under assets. Selling an asset using a market order is just as easy. We'll come back up here to the order panel, make sure we're set to market. This time I'll move from buy to sell. This time I'll go ahead and just use this slider bar and I'm going to slide this all the way up to 100%. Once you have the order set up the way that you want it, you just simply click on sell. And as you can see, I just sold that Bitcoin at the best available price from the order book. Next up, we have the limit order. A limit order will allow you to be more strategic by choosing a price point that you wish to either be a buyer or a seller of an asset. These orders will not fill until price action reaches your entry price or your exit price. Depending on how much you're trading with, you will also pay a smaller fee for using a limit order. This is because you're placing a limit order onto the order book for all to see. So in other words, you're providing liquidity to the order book versus taking from the order book by executing a market order. Typically, exchanges like to incentivize traders to provide liquidity to the book, and usually they'll do this by charging smaller fees for executing limit orders. And I'll be getting to fees here shortly. The first step is to toggle the order panel over to limit and then choose if you're going to be a buyer or a seller of the asset. I'll demonstrate as a seller first. Next, we need to choose a price point that we want to sell at. So let's head on over here to the chart. And just for fun, I'm going to grab a horizontal from the drawing tools here. And I'm going to go ahead and mark this area out right here. Good enough for this demonstration. Now let's imagine that we're looking at Bitcoin and we're thinking to ourselves, you know what? It looks like Bitcoin's getting ready to break down to a new low, but maybe it wants to pop up just slightly before it rolls over and dumps to the downside. Maybe somewhere up to this horizontal here. When we look left, we can see that was resistance in this area right here. We can see that it briefly found support on that horizontal here. And we can even see that this pivot point got down to that horizontal before Bitcoin played out its last breath of the bear market rally. So maybe that's an appropriate area to be considering a sell in this particular situation. At the end of the day, you'll have to do your own technical analysis in order to choose the price points that are appropriate for your situation. But for this demonstration, this will work just fine. Now that I have that area marked with the horizontal, I can see on the y-axis of the chart that there's a price point that correlates to that horizontal, coming in at 20,572. So I'm going to come up over here to limit price, and I'm going to type that in, 20,572. Next, we need to choose the amount of the asset that we wish to sell if price action is able to reach our order. Down below under assets, we can see the available balance of the asset that we're looking to sell, so we'll know exactly what we're working with. We could always type in a custom amount into quantity here, or we could just simply use this slider bar to allocate a percentage of the available asset that we wish to sell if this price level gets hit. For this demonstration, I'll just go ahead and slide this up to 100%. Once you have your order set up the way that you want it, you'd simply click on sell. You might get a little pop-up saying that the price you entered exceeds 5% of the last traded price. Do you want to continue? Of course, I'll just simply click on confirm. Yes, I'd like to continue. And now I've placed that order onto the order book. If price pops up and reaches my order price right here, my Bitcoin will be sold at 20,572. If at any point you want to cancel the order, you can come down here to open orders. And over here on the right-hand side under action, you'll see where it says cancel. Just click on cancel. And as you can see, I've successfully removed that sell order from the order book. Of course, you can use a limit order in order to buy crypto as well. So let's come back up here to the order panel. We'll toggle from sell to buy. And now let's select the price point that we're looking to buy some crypto. So let's head back on over to the chart. And this time I'm going to change the time frame from a daily into a weekly. And just for fun, I'm going to grab a horizontal and I'm going to mark this area way down here. We can see that there was a little bit of resistance in that area here. And then we can see a weekly candle break up above that area here, and then the rest is history as Bitcoin went on a massive bull run from there. So maybe that's an appropriate area to be looking at to buy some Bitcoin for the long term. Once again, only you can decide by doing your own research and your own technical analysis, but for the purposes of demonstration, this will work just fine. Now I can see that there's a price point correlated to that horizontal on the y-axis of the chart that's coming in at 12,425. So I'll come back over here to limit price and I'll go ahead and type that in. 12,425. Next, we need to choose the quantity of the asset that we wish to purchase if that price is met. And for this demonstration, I'll just go ahead and I'll put in an order value of 50 tether. When you have the order set up the way that you want it, you just simply click on buy. We're getting that warning again, letting us know that the price you entered exceeds 5% of the last traded price. Do you wish to continue? And of course, the answer to that is confirm. Now we've placed that buy order onto the order book. If Bitcoin decides to start moving to the downside and reaches all the way down to our entry price, the order will fill and we'll be buying Bitcoin down at 12,425. So as you can see, limit orders will allow you to be a little bit more strategic when buying and selling. With a little bit of patience and some good technical analysis, you can often get better entries when buying cryptocurrency, as well as better value when selling your cryptocurrency. But there are some considerations when choosing to use a limit order. For example, in our selling scenario, maybe price action doesn't get up to our sell order. Maybe it just dumps straight from here. We're still holding onto the crypto as price moves to the downside. Or maybe price action gets up, fills our order, and then just continues on without us, and we miss out on those gains. In our buying scenario, maybe price action doesn't quite get down to our buy order, bounces and moves to the upside without us, or perhaps it gets down there, fills the order, and then just continues to the downside. So a couple considerations when choosing to use a limit order. Now I'll show you how to set a stop loss. You can set a stop loss limit order or a stop loss market order. And I'll start out by demonstrating a stop loss limit order. So let's come up over here to the order panel. Let's toggle over to stop loss limit, then we'll move from buy to sell. The first thing we need to do is identify a price point that we can set as a trigger price to tell crypto.com to place a limit order to sell our coins. So now let's come back over here to the chart. And just for fun, I'll grab a horizontal from the drawing tools here, and I'll go ahead and put it on the chart somewhere in this area. Right about here. Good enough for this demonstration. Now let's imagine that we're viewing that horizontal as support. We can see a wick getting down to that area right back here. We can see that price action got down to that horizontal here before the bulls tried to push price action back to the upside. And most recently, we see that price action is trying to hold that horizontal in this area right here. But maybe we're looking at that and we're thinking to ourselves, you know, if that level of support breaks, then maybe it becomes probable that Bitcoin's going to move to a lower price level. So perhaps we want to set a trigger price somewhere down below support that's going to tell crypto.com to place a limit order to sell for us. Maybe we want to use this wick right down here as our line in the sand. So let's go ahead and mark that wick out with another horizontal, maybe something like this here. Now we can see on the y-axis of the chart that there's a price point correlating to that wick, coming in at 18,097. So let's come back up here to the order panel and let's type that into trigger price, but let's go just a little bit lower than that wick. So maybe we want to go 18,010 in this particular situation. Now we need to choose a limit price that we want crypto.com to place our limit order at. So we'll come back over here to the chart and I'll zoom back out just a little bit. And let's just imagine that we're looking at this wick right back here and we're thinking, you know what? Let's set that as our limit price to sell our coins. So of course, I'll go ahead and quickly mark that the horizontal. That way we can see a price point correlating to it on the y-axis of the chart. And we can see that that is coming in at 17,626. So let's come back up here to the order panel and in limit price, we'll type that in. 17,626. Now we have our trigger price and our limit price. So if price action reaches 18,010, our coins will be sold at the limit price of 17,626 or better from the order book. From here, we'll need to choose the quantity of the asset that we wish to sell if our trigger gets met. And for this demonstration, I'll just go ahead and slide this up to 100%. Once you have the order set up the way that you want it, you just simply click on sell. Then you'll get a little stop loss limit order confirmation here. And in my case, it's letting me know that if the last traded price drops to or below 18,010, a limit order to sell my Bitcoin at a price of 17,626 will be placed. So it'll sell at 17,626 or better from the order book. If you're satisfied with the details, then you'd simply click on place order. Now I've placed that stop limit order. If price action begins to fall from here, getting through support and hits the trigger price right here, the coins will be sold down at this level here or better off the order book. You'll also be able to view the details of your open order down here under open orders. And if at any point you want to cancel this order, you can come over here on the right hand side and right underneath action, you'll find the cancel button. Just go ahead and give that a click. And as you can see, I just removed that stop loss limit order. A stop loss market order is similar to a stop loss limit order, except your coins will sell immediately at your trigger price. To set one up, we'd come back up here to the order panel. We'll click this little arrow beside stop loss limit. From the drop-down menu, click on stop loss market order. Then we'll need to put in a trigger price. So let's use the same trigger price of 18,010. This gives us a little bit of breathing room. We don't want price action to come down to support, sell our coins, and then bounce back inside the range. So going just a little bit lower than that level could increase the probability to avoid that situation. Now we'll simply choose the quantity of the asset that we wish to sell. I'll just do 100% again. Then once you have it set up the way that you want it, you'd click on sell. Once again, you'll get your stop loss market order pop-up window here. Confirm the details, make sure it's what you intended. And if it is, click place order. Now we've placed that stop loss market order. If price action gets down to our trigger of 18,010, the order will fill and we'll be selling our coins. If you want to cancel that order, just come back down over here to the bottom right hand side of the open orders panel. Underneath action, click cancel. And as you can see, I just removed that stop loss market order. To find the fees on crypto.com, just come up here where it says more. And then from this menu, click where it says fees and limits. And here's where you'll find all the fees. At the time of recording, you can see that there are 0 fees for placing maker orders. So that's if you're going to be placing those limit orders. And at the time of recording, they have 12% off taker fees. That's if you're going to be using market orders. And as you can see, the more that you're trading with, the less you begin to pay in fees. Now the fees can change around during different market conditions or promotions, so it's always worthwhile to come in here, check out what the current fees and limits are. They could be different by the time you're watching this video. And there you have it, your introduction to using the crypto.com spot exchange. If you found that helpful, don't forget to leave me a like and hit subscribe. Also check out my other crypto.com tutorials that I left for you in a playlist on my YouTube channel. Thank you so much for coming by and checking out this video. Looking forward to seeing you in the next one. And until I do, have yourself a powerful day.